Welcome back. T-Mobile shares higher this morning after a beat on the top and bottom lines, raising guidance for the year after strong customer growth. CEO Mike Sievert joins us now to discuss. Mike, thanks for being back with us.
Of course, it's a pleasure to be here.
So really strong results, and it certainly seems like, at least from the notes I've seen from analysts on Wall Street this morning, that the company is very much firing on all cylinders, both in terms of the growth, the numbers you put out, and this integration post-merger and the synergies that are expected to be realized there. The one thing that I'd say is pretty nitpicky is valuation of the stock, given the run we've seen in shares. Are you nervous or, I guess, concerned that investors are getting ahead of themselves in terms of how high the expectations are now being set?
Not at all. You know, a month ago, we laid out a 5-year plan for the investment community at our Analyst Day and showed the massive cash flow potential that's ahead for this business. And we're so excited about this synergy-backed model that we have from bringing these two companies together that's allowing us to do something the others can't do, simultaneously deliver the leading growth in the industry while growing profits and cash flows. And that's just a fantastic opportunity for investors over the long haul.
Yeah, it certainly seems like consumers are really getting excited about 5G, and that's a big driver of the growth you've seen in terms of subscribers. I wonder how that's translating to actual upgrades of 5G phones like the iPhone.
Well, customers are finally starting to notice. You know, this industry's been talking about 5G for years, and while customers have been sort of side-eyeing it. But now, with the networks arriving, particularly T-Mobile's, we're covering 1.6 million square miles of this country with 5G. That's more than 1/3 more than AT&T and Verizon combined. And customers are noticing. And so now there's this demand for 5G phones starting to pick up. Plus, you know, the market's returning. We've had a muted switching environment for the last year as customers haven't really been in retail. And that's changing. It's starting to change. And that's a great opportunity for T-Mobile. We're very much a company positioned for this return to normalcy because when people switch carriers, T-Mobile's the net gainer. And we're starting to see that happen.
Yeah, I mean, it was only a few years ago that wireless plans, especially given the pricing competition we saw that was driven by T-Mobile and at the time Sprint, were seen as a key factor that was keeping a lid on inflation when you looked at the macro data. Now that we've gone from 4 to 3, and I realize that there's stuff in place, at least for the next couple of years, around pricing for the company post-merger, but when I see increases and growth in average revenue per user, I guess put a little context around that, and longer term, what do you see that trajectory for pricing actually being?
Well, we're not driven by promises that we made. We'll comply with all the promises, but we're keeping prices low because our growth comes from taking share and growing subscribers. And that's what's always made the T-Mobile model work. You know, we're the only company in the market right now, or in the history of this industry, that's positioned to be able to offer simultaneously the best value, lower prices like you said, and the best network at the same time. So customers no longer have to choose. That's a phenomenal opportunity to deliver revenue growth through subscriber growth. And so we don't have to price up this business to grow our revenues. We can stick with the model of being the value player. But now we're attracting higher-end customers that want to buy up our chain, including our new premium offer, T-Mobile Magenta Max, which offers the industry's only true unlimited plan, which is what 5G is made for.
Shepard Smith here. Thanks for watching CNBC on YouTube.